Baby, what a day. What a reversal this afternoon. Man, this earnings season has been a wild one, but that's all right though. We're back to work tonight. We got one more day left. We got some more big news coming tomorrow, and I'll tell you, don't let this crazy volatility scare you. I got some great trades we're tracking for a finally Friday trading session. I got a great plan of attack for tomorrow. I'm going to go over my favorite trades in the video tonight that will you have a game plan to make some moolah on Friday. Before we jump in though and get the party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy these video lessons tonight, do me a favor, as always, hit that like button for me and give me a shout out down in the comments section below. Thank you so much for tuning in, supporting the channel. It's been a wild week, but we're not done yet. Let's go find some more winning trades tomorrow. It's been a great week this week so far. Hope you guys are having a great week as well. So where are the best trades setting up here for the S&P and the Nasdaq? Now, starting off tonight on the 60-minute time frame, I like to use the 60-minute to plan my trades for the following day. And then later on in the video, we're going to drill down to some faster tick charts, and we'll talk about the entry tactics. The tick charts make entry setups a lot easier. So we'll talk about the specific entry tactics to trade these ideas later on in the video. Now, there are two main components right now on the Emini and the SPY, the Nasdaq and the QQQs, that are kind of tipping us off to where the best trades are probably going to be for tomorrow. First of all, over on the S&P, this is a very strong move down right now, but let's not forget, right? We're still an overall bull market on the S&P. If you've taken my free trading classes, you know exactly what this pattern is. This is a bear trap right here. So I definitely like the idea of some bear traps here. Bear traps are certainly on my radar here for tomorrow. Overall bull market right below a prior swing. Similar situation, the Nasdaq, a little bit different on the NQ, right? The Nasdaq, if you recall, is an overall bullish market, right? We get that deep pullback into a trading range. Ranges love to rotate. We go up, and they're trying to rotate now, right, down off that high. And I got to say, with an overall bull market on the Nasdaq, you have to think there's a lot of buyers who would love to load the boat and go right back up again. We've seen buyers buying these dips all week this week. So again, I definitely think there are some bear traps to be used on the Nasdaq and the QQQs. Now, let's talk about the second component. These are very strong runs down. That's a very strong run down for the Emini and the SPY, very strong run down for the Nasdaq. Anytime we see a strong move in one direction, what do we always expect? A pullback, a two-legged pullback, we'll talk about that in a moment, and a retest of that low in this case. So same thing with Nasdaq, right? Strong move down. We're expecting a pullback and those bears to try to retest that level. I really think when you look at these charts right now, I think there could be bear traps off the low, and I'm going to go into a lot more detail of this here in a moment, don't you worry. So bear traps off the low. I definitely think there could be some money to make on what I call a two-legged pullback for some shorts, right? Two-legged pullback, some shorts, and then you guys know I love double bottoms, right? Double bottom reversal, double bottom reversal. I like those ideas as well. So really, if we play our cards right tomorrow, I think there's money to make on both sides. The bear traps, the two-legged pullbacks, and one of my favorites for tomorrow, that double bottom reversal. So we're going to go over all the details on this. Got a couple long trades, some beautiful bear traps, and of course, right, get some pullbacks, some two-legged pullbacks we'll talk about as we go deeper into the video here tonight. Before we jump into the tick charts though, let's double check on the schedule for tomorrow. Tomorrow's a Friday. It's a summertime Friday, and the two things that you want to be kind of aware of tomorrow. First of all, you know, if you take away the FOMC announcement on Wednesday afternoon, this personal income number is one of the biggest news reports you're going to get. So it's definitely a good catalyst to keep on your radar for tomorrow. That's the first thing that you kind of want to be aware of, that 8:30 personal income number. They call it the PCE deflator. It's an inflation number. Anyways, the second thing that you want to be aware of, and what ultimately spooked these markets this afternoon, is tomorrow we have the third of three Fed banks reporting. We had the FOMC on Wednesday, we had the ECB this morning, and then you may have seen the headlines, right? But this afternoon, the Bank of Japan, right? The BOJ, they came in, and well, it was this afternoon, they talked about monkeying around with their yield curves and yada, yada, yada. The reality is that, in my opinion, is the biggest variable, the biggest question mark for tomorrow. One of the hardest things we have during this overnight right now is we don't know what the Bank of Japan is going to say. We saw how the markets reacted this afternoon. Hopefully that won't shake things up too much, because we got some great trades planned. We'll talk about here in a moment. Those are the two things on my radar for tomorrow. The big question mark again is that Bank of Japan announcement coming out sometime probably between midnight and 2 a.m. Eastern time. The last thing you want to be aware of is tomorrow's a Friday, right? Fridays love to get a bit illiquid, right? They usually dry up in volume as we get later on in the session. So my mindset on a Friday morning is always to get in as early as I can and try to leave a runner into the afternoon session, because if you guys have been trading for a while, you probably know Fridays love to run. They love to run on low volume. So early in tomorrow, not necessarily early out. Take some profit, get rid of risk, but try to leave a little position just in case these markets get illiquid. Sometimes you can make some really, really big profit on a very small piece of the pie late on a Friday. Anyways, that's what's going on the news here for tomorrow. Now, let's get back to our charts, because, of course, the money is made on the charts. Why don't we let's go over my favorite trades now. S&P first, S&P and SPY, and then we'll wrap things up here on the Nasdaq and the QQQs. Like I mentioned in the introduction, we're still an overall bull market. I think there's a great spot here right now, really anywhere in this area down here, for some bear traps. So I definitely have some long trades on my radar right now. And again, we're looking for that pullback, that retest. I think there could easily be some shorts on the way back down, and that double bottom, right, as we mentioned earlier. Now, let's talk about this. The 60-minute chart, not that good to trade off of. Let's now drill down to our faster time frames. This is a tick chart. I think tick charts make everything easier. Remember, trading is a lot of pattern recognition, and tick charts make patterns easier. This is a 7,000 tick chart. You can see in the upper left-hand corner, and this is the 21 EMA, in case you're watching here for the first time. What's the most important factor right now on this tick chart? There are two things that you want to keep in mind. One is it's a very strong move down. Anytime I see a real strong move down like this, I anticipate what's called a two-legged pullback. Okay, if you're a student of mine, I call these 1, 2, 3 moves, but I want to keep the language a bit clearer for people who aren't our members of our trade room. So I call these 1, 2, 3 moves. For most people, though, they'll call these two-legged pullbacks, right? So one two-legged pullback, and then a retest of that low. Once we retest the low, then oftentimes you'll see bears come and get trapped, and we'll bounce back up off that low. So anytime we see a strong move in one direction, we expect a modest pullback off the low. We expect bears to come in and look to short for a retest of that level. And in an overall bull market, you would think the buyers be waiting there right now to buy that double bottom right back up. That's one thing on my radar. The second thing is lots of support. We saw this on the 60-minute chart. There's a lot of support down here. This may not be the absolute bottom. We may keep on grinding down here overnight, but in this area is where I believe there's a lot of support levels. You saw that on the 60-minute. So let's talk about this, right? Because there are really three basic pattern setups. I'll tell you, any one of these three setups could be one of the biggest winning trades for you this week. The first thing is because we have such a strong move down, we have to be careful trying to buy this thing right now. We need a catalyst, right? So because it's a strong move down, it may keep grinding lower. The way in which you buy a big move like this is you look for what I call a crown reversal. Inside the free trading classes, I talk about two patterns. One's a failure and one's called a trap. If you kind of wrap together these two setups, which you guys should be learning right now in the free trading course, if you wrap these two together, that's going to give you the best way to buy this thing off of the low. Remember, we don't want to pick a bottom on this. We have to assume these bears are going to be trying to run this thing lower. So I got to make sure we let those bears commit. And then I want to buy as low as I can with a bear trap, because if we go higher, we expect who up here? More bears coming in for that short back down again. All right. So I want to make sure as I'm buying off that low, I want to look for what I call a crown reversal, which again is just simply one try for the bears. It's two try for the bears and a bear trap right underneath that low. Now, as we go higher, I had a channel on there a bit earlier on. It's tough to tell how far that pullback will go, but usually what happens is this two-legged pullback will be a little bit larger than a measured move. Okay, measured moves are ABCDs, right? So 100% extension going higher. Usually what happens is we're going to find that two-legged pullback, and usually somewhere just a little bit above, right? Just a little bit above that kind of measured move off that low. We don't have enough information yet, but that area is where I'll then be looking for as we go higher. I'm going to look for buyers now to start getting fooled on this for reversal. Now, later on in the video, I'm going to talk about how to know if this pullback is a reversal and can be bought, a short squeeze, right? Or if I want to sell it. Okay, so we'll talk more about that in a moment. But ideally what I want though is I want to get that two-legged pullback, right, coming in off the low. And again, think about a measured move a little bit further, right? It's often a little bit further. Then once we get this pop up, remember the market will want to go back and retest that low. We're hoping now we can sucker in some buyers, right? Get some of these buyers to chase this thing, and then we can use their stops as fuel in what I call a failure pattern. All right, a failure. Okay, back down to retest that low. Okay, so think about this. It's a bear trap, okay, to buy low, and then as we get that two-legged correction, right, then we look for that failure pattern, just like I talk about and teach in the free trading course, which reminds me, we're going to talk a lot more about these setups as we go deeper into this video. I know that most of you guys have taken the free classes and learned these, but if you haven't done that yet, I'll put a link up here for you in the upper right-hand corner. If you're not making consistent money right now, these markets are way too good not to be. Grab that link, take that free trading course. The strategy you'll learn in that short video series will teach you a stupidly simple trick that we use every morning in our trade room to know exactly where the best winning trades are going to be that day. On top of that, I'll teach you my 4 favorite entry patterns, things like failures, things like traps, all part of the price action cycle. You'll learn it all. You'll love it. If you're not making the money you want right now, definitely hit that link up there. Take that free trading course. Get on the right side of these markets. And don't forget, I'll put all the important links you guys need. I'll put those down in the description of the video. So if you can't grab that pop up there, I'll put all the important links down below. All right. So again, I'm looking for, what was it again? It was that crown reversal, which is basically a bear trap, right off the low. You want to be buying as low as you possibly can. Okay, 1 try, 2 try, buy as low as you possibly can. Then, once we start getting above the moving average, now it's like measured move, a little bit more than that measured move here, two-legged pullback, two-legged correction. The moving average comes up. We trap those buyers in, right, and we're selling back down. Okay, now, once we retest the low, what do we always say? Mission accomplished. Right? We know that a strong move down like this is going to be hunting for a retest of that low. The professional sellers are going to sell high. Nobody wants to sell low, not after a big move like this. So if we start seeing rookies come in, right? If the rookies start coming in and shorten this thing, remember, this is where we are taking profit. Okay, this is where professionals are taking profit. We should not be selling down here. But if we do see bears begin to short off this, we can assume these are rookies, right? Professionals are not going to short down here. Rookies come in, they try a couple times, they're tight stops, and we can now use their stops. Remember, momentum in this situation is very bearish still. We might be overall bullish, but this is a pretty bear momentum situation right now. So I don't just buy the bottom. We don't pick bottoms. Okay, very difficult to make money picking tops and picking bottoms correctly over a long period of time. I would rather rope in the sellers, right, and use their stops as fuel with a bear trap, or in this case, a failure pattern. Now, these are pretty easy. These are pretty easy because if we can get that 2-try failure, 1 try, 2 try, okay, then we have a pretty good idea of where the market wants to go. It'll want to take out that high. So that ultimately now becomes that what we call the rotation target going higher. Okay, if it's me tomorrow, right, I'm grabbing half the position off, get rid of the risk, and again, leaving the runner, right? Leaving the runner into the afternoon because again, Fridays, they love to run. Okay, now I got a couple more variations of this that I want to talk about. Later on in the video, I'm going to talk about ranges. Okay, we have to assume there's potential for a range tomorrow. It's a summertime Friday. We don't really have any big earnings until next week, until we hear from Amazon and that little company called Apple, right? They're coming next week. So we should be paying attention here if we see some ranges. I'm going to talk about that on the Nasdaq a little bit later on in the video. But let's cover one more variation. What if this market V-bottoms and rips and runs higher? It doesn't seem likely right now, but I have no idea what tomorrow brings. Anyone who tells you they know what's going to happen next is probably just not experienced enough, right, to know the realities of these things. But the reality is, this possible, right? We may get that rip going higher. How would you know, right? How would you know? How would you know when a pullback can be bought? Right? Or to be sold. It's actually pretty easy. There are actually 2 different clues that I'll be looking for tomorrow. So for example, here's one. So let's say we get the 2-legged pullback, right? 2-legged pullback going higher. Again, think about a measured move a little bit further through it, okay? What should happen at that point is we should see the bears come in and run this thing back lower. If we start seeing buyers struggle on that pullback, now we know we have the stops, we want them, and we can short back down again, okay? If the buyers hold that pullback, okay, this is the basic, we call a 1, 2, 3 reversal. If we pull back to the moving average and jump off of that moving average, okay, now bear with me, right? I'm drawing the screen right now. It could be here, right? It could be a bit higher. I don't know exactly where it'll be, right? But we'll probably get that 2-legged pullback. They'll try to short this thing, right? But the buyers will be too strong. They'll hold off the moving average. Once they jump and begin to separate off that moving average, now we pretty much know where the market wants to go, right? They're going to want to take out some of these highs here after that sucker punch they got this afternoon. Now, the key here is how you find the entry. We're going to go out and draw a trend line off the high, okay? We're going to pin it down at these lows. And then all we do is you wait for a pullback. Okay, that pullback will usually get just below the 21 moving average. Okay, once we get that, remember, at this point now, we've jumped off the moving average. This is not a pullback anymore. This is a reversal at that point now, right? Too much bullish momentum. I would love to catch some bears shorting underneath that moving average. Really any of the entry patterns you guys are learning in the free trading course can be applied to the low of that channel. Again, notice how I draw it though, right? It's a higher high in price off the high. And what I'm doing is I'm pinning them right down around these lows down here to find that channel. Get those bears roped in. Use their stops as fuel. We call these failure into pullback combinations, right? Failure pattern, pullback combo, maybe even a strength trade if we can get that early enough in the session. All right. So again, if we get that 2-legged pullback and they hold that pullback rather than failing back down again, that's a reversal. Right? That's a reversal. Now, there's one more that you want to be aware of. Let's say we get that 2-legged pullback, right? Again, 2-legged pullback here. Think measured move. But now what happens is we don't pull back to the moving average and jump. Now what happens is we start to flutter, right? We start to flutter and kind of grind and grind and grind. These are pretty common whenever a market gets like spooked in the afternoon, and then it kind of reverses that following morning. Again, we have the Bank of Japan overnight. It's a big question mark. So for all I know, we could easily V-bottom off these. Again, lots of support down here. Like I mentioned earlier, beautiful spot for a bear trap. So for all I know, right, they'll two-legged pullback, but they'll keep on grinding and grinding and grinding. These are called, I call them pop and grind moves. If you guys are with me in the trade room, you know this is my favorite dance move right here. Pop and grind. We draw off the high. We pin off that low, right? And all we do now is look left, find some prior swings, and try to grab that first test off the low. And again, right, this could be a steeper channel. We just don't know exactly how this price action will look tomorrow. But that's the second way in which we know this pullback turns into a reversal. All right, guys? So as you can imagine, right, getting that crown reversal off the low, popping up into a grind, right? That could easily be that bear trap. And then again, finding that new channel like I'm drawing out right here. All right, guys? So that's how we want to look for this, right, on the reversal side. How we know a pullback is a reversal, not a pullback. And again, be aware, we may keep bleeding lower here overnight. We're still looking for the same basic principle. Bear trap up, two-legged pullback, 1, 2, back down, right? And then double bottom reversal, bam, right back up to take out those highs. It's a pretty simple game plan, right? Pretty simple game plan. That's why I like to keep it. Now, let's talk about the ranges, because there's a lot of variations of the ranges. Why don't we go to the Nasdaq now? I hate to leave the Nasdaq hanging right now. The Nasdaq is very similar to the S&P. There are, of course, some very big differences you'll see here. Why don't we talk about the Nasdaq, though, here for a second? So the Nasdaq's a weird one. You know, we've talked about this here for a while now. It's an overall bull market on the NQ. But again, like I mentioned last night and night before that, that strong move down is very convincing, right? Very convincing. And of course, we have this trading range. Okay, what's happened now is we've now rotated. Remember, range-bound markets love to rotate back and forth. So now we're rotating off the high, and we anticipate these bears are going to try to run this thing roughly equal to the amount above that trading range, the support trend line down there. Now, if you've been watching my videos so far this week, I mentioned earlier on in the week, whenever you have a bull overall market that is bearish into a trading range, what did we say earlier this week? There's a ton of buyers waiting below trading ranges, right? Think about it, right? Because if we go below the range, remember, ranges act like magnets, right? Ranges act like magnets. If we're overall bullish, and I have a range below me, the best place to buy is below that trading range. I would love to go with the overall bull bias, right, with it, and I like to use that range as a magnet. So we're kind of right back to what we were talking about earlier on in the week this week when I said my favorite trades in situations with a bull market, bearish into a trading range, my favorite trades are bear traps below that trading range, because that accomplishes all of our objectives. We're buying at support with a range above us. The hardest part, like I mentioned last night, is buying above that trading range, because we want to go up and rotate back down again. Now, I definitely do think the Nasdaq has room to go, right? I would not be surprised at all if the Nasdaq takes out, right, this, what's that, 15,483, right? We still have that big top. That big top right there and all of its counterparts still have not been taken out yet. So we may still have some room to go lower here. But really, when you think about it, the game plan is very, very similar here on the Nasdaq that it was to on the S&P. Right? There are two main factors. We have a very strong run down. Anytime we see a strong move in one direction, we expect a pullback and a retest of that low. So it's almost identical. The game plan really is identical to the S&P, and we get a bunch of support down here below us. Right? So beautiful spot here right now for a bear trap. So really take the game plan I gave you on the S&P and the SPY, and you can pretty much copy and paste it over here to the Nasdaq. Now, one thing I do want to talk about, which can apply to the S&P as well, is a trading range. We have to anticipate that ranges could be part of the game plan for tomorrow. I just talked about that whenever I have a bullish overall market, but I'm bearish into a trading range, you probably can finish my sentence right now. What's the best trade for tomorrow? The best trade is to get this run lower. Now, remember, we're waiting on more confirmation right now for that trading range. But this one's pretty easy, right? If you understand the idea of that bear trap and that crown reversal pattern that I talked about earlier, that's exactly the pattern setup you want down here. This becomes very, very attractive for a lot of different reasons. Again, the range is a magnet. We're at support, overall bull market. If I can get the bears trying a couple times down here, right, all of a sudden now that price action will oftentimes slingshot back in the opposite direction. Now, in these situations, we want to do it. Remember, we're not going to pick a bottom on this. We'll let the bears try a couple times and try to use their stops, right, to fuel this thing back up into that trading range. What does trade management look like on something like this? It's pretty simple. The opposite side of the trading range is always the objective, and then the amount we go below the range can now be projected back above the range. These are usually make for excellent targets, and with tomorrow being a summertime Friday, the mindset is let that thing run. Well, don't let the whole position run, right? Half off, quarter off, leave a little piece, right? What we call that pendulum swing going higher. Now, very, very important here. When a market rotates off the low of a trading range, this move higher can be very, very strong. Okay, oftentimes these become very, very strong run higher. And a lot of times what happens is these things will pop and they'll begin to grind, right? Remember I said earlier on the S&P, if it pops and begins to grind going higher, that should not surprise anybody if that happens tomorrow. And if it does, right, we mark off that high, we mark off those lows, and we start what? We start looking for bear traps, any of the entries off the low of that channel. Okay, so I want to keep that in mind for tomorrow. What I want to be careful with, though, is you got to be careful selling this. Okay, this is where you really got to wait for those buyers to try once, go lower, try twice. Really make these, because again, this momentum as it rotates off the low could be very, very strong, and wouldn't surprise me at all if it just rips and runs right back up into that range above us, as if to give back or make back that entire sucker punch they had this afternoon. But if we can start seeing these buyers try once, try twice, they're not getting that, right? They're not getting that fluttering. They're not getting that jump off the moving average. Now we have the buyers right. We want them. We know where their pain is, and we can now use that failure pattern, a two-try failure, to short off the high. Even better with one of these, right? When we go lower, buyers once, buyers twice. Even better would be something like that, right? Gets up above that prior high and that move back down. But the goal is, though, is let those buyers try a couple times, right? Let them try a couple times and then look for that short going back down again, all right? And again, do not be surprised here. Do not be surprised here if it head fakes off that low, rips higher, as the moving average comes over, the buyers come in, they hold the pullback, they jump and keep going. And then at this point, it's just on, right? It's a race here right now to find that channel and try to grab that first test. That may not be an easy one, right? That may not be an easy one. This thing, these tend to rotate off the low, and they tend to really punch and go higher. What would be an aggressive way to do it? Let's talk about that. I have a few more minutes left on the video. If we were to roll off that low and this thing just rips, right, and pops, what do? You start buying as low as you can, right? You buy what? You buy bear traps, right? We don't want to buy as it goes higher. One of the keys to making consistent money is we always want to be of the mindset of buying as the market goes lower. I know it's counterintuitive, but if you can sell as we're going higher, right, and then buy as we're going lower, you will be on the right side of the market a lot more than not, right? So if it does start to punch up and rip, grind, right, grinding away from that moving average, right, traps. Traps are always going to be your best bet on that. The only other variable here is if we go chop around going sideways and then pop up overnight, this range, not a lot changes. That range becomes a magnet. We'll try to get up around the moving average, trap those buyers in, back down into that trading range? Do they hold the pullback and jump? 1, 2, 3, buying that pullback. And of course, we'll know more once we have more details here for tomorrow. And again, I'm kind of speculating right now on this trading range. We could easily, like I said earlier, look at the 60-minute chart. We could easily keep on grinding down here overnight. Do not let that fool you, though. We are still looking at this as a bear trap area to buy right back up again. So don't count tomorrow out. Tomorrow, we usually seem to find some really good trades on a Friday. The key is keep it simple. Don't overthink things too much right now. Get in early, take some profit early, get rid of the risk early, and leave that runner. Now, tomorrow morning, every morning, 8 o'clock Eastern time, the best way to learn this stuff is to come out and do it with me every morning with all the other members in our morning trade room. I want to see you there trading along with us here sometime soon. I'll put all the important links, all the free class links to learn the basic strategy. I'll put all the membership links. Everything you'll need is down in the description of the YouTube video. If you need help, if you got questions, if you're not getting into the free classes or something's wrong, don't be afraid to call the office. We're always here. Megan and I are always here to help answer questions. We got live chat on the website. So reach out if you have questions, if you need help along the way. I'll be here to help out every step of the process. All right, guys. Boy, it's been a great week so far. Earnings season never disappoints. So get some rest tonight. What will the Bank of Japan say in their announcement? That, in my eyes, is the biggest variable going into tomorrow. Early in, leave those runners. Have a great day tomorrow. And hopefully I'll see you sometime trading with us in the morning trade room soon. Got any questions? You know where to reach us. As always, my name is Joseph. Thanks for watching. Be well. Be nice to each other out there, will ya? And be here next time. Adios, amigos. Bye-bye for now.